Hi, welcome to this Axia Elite Execution stream. It's a different face. Usually you have Adam, but I'm going to be doing this stream because there's a really important lesson in today's execution over a Bank of England event that occurred in September. And we're watching our head trader, Demetris, and our elite news trader really using multiple skill sets and showing the whole edge spectrum of how to trade news, or how when the market and the information in the news is more subtle, how you can still engineer a really powerful trade setup. And this was an event that not many, even of our traders, were prepared for. And it shows the ones that aren't prepared for every single event aren't going to profit over, the events that are occasionally a bit of the outlier, and only rewards those that are deeply prepared for all events. So really excited to be doing this stream because it is to be looking at our trader that I sit next to, Demetris, and there's so many lessons in this. It's not going to be hopefully a too long a stream, but we're going to be looking deeply at some of his key skill sets. And right at the end of the stream, I'm going to be looking at a spectrum, an edge spectrum of how you go about trading news, and a gradient of edge. A few sophisticated words there, but I'm going to explain this a little bit more in detail at the end. So this was the BOE rate decision that happened on Thursday, the 17th of September in 2020, and we'll be looking just a few more minutes. We're going to give a bit of a backdrop of what happened before the event. So those of you who've done our central bank trading course or have done it on our career program, we have a specific structure for preparing for all central bank events, for the speakers. And one of the critical aspects is understanding statement science and understanding what's pricing going into the event. And so before the event, you're understanding what all the speakers have said from the various central banks. What they've actually been communicating, what was the last statement, the last minutes. And so you start gaining an understanding of the expectations, and when you understand expectation, you know what the outliers are. And that's what Demetris has become really powerful at doing during his career, is knowing those outlier events. But even when the outlier events aren't big outliers, knowing then how to shift your edge into the subtle nuances of correlation flows, understanding the order dynamics and the price personality shift on that price ladder, which is so important as a world-class trader, or your journey towards becoming a world-class trader. So the most recent speech from the Bank of England members indicate that negative rates are not imminent. And key word here, and this is how you're starting to determine, well, if not imminent means you're not going to be pricing in negative rates in the next month, 2 months, 3 months, maybe a year and further out, and also depending on the economic data landscape. And we have one of the members, BOE Saunders, says still questions about use of negative rates. So if you look on a scale of 1 to 10, you're looking at around 2 to 3, where there's not this strong impetus for putting across these negative rates. And then on the 7th of August 2020, Bank of England's Ramsden says we are not actively planning for negative rates. And then the actual BOE governor, Bailey, says, please don't think we're about to use negative interest rates. That is not the current plan. So if I were to ask you right now this question, when do you think the Bank of England will hike rates? And so when you see this type of communication, you pretty much are starting to price out that negative rates are not in the immediate future.
If you want to learn the 3 keys to consistent trading success that our team of 7- and 8-figure traders use to stay profitable in any market environment, then check out the free workshop that we're currently offering. Click the link that should be appearing at the top right-hand corner of your screen, and a free registration page will open up in a new window, so you can later return to watching this video.
You can also register by visiting elitetraderworkshop.com.
In this free workshop, you'll learn the exact steps our biggest traders use to develop consistent trading success and shortcut years of trial and error.
So that was kind of the rhetoric, the speech that was leading into the meeting on the 17th of September. And then this is what happens on the day. This is the screen dump. Now, the Bank of England have changed the way that they release information to the public. They have the so-called lockdown period, and sometimes, as opposed to the past, there would be one entirety screen dump. It actually gets released in a piecemeal process. So first, it gets released around 12:02, but the main statement, and you'll see as it gets released, the three main markets that Demetris, our elite trader, was looking at was the cables, so GBP USD, so that's the British pound, the gilt market, which is the 10-year UK government bond market, and then the short sterling market, not a market that he trades, rarely, if ever, trades, but he does trade it today, and that was really one of his linchpins, his pillar post that he could lean on to trade markets such as cable and gilt, the British pound and the 10-year UK government bond, that he trades more often on a more regular basis on so-called Brexit or Bank of England or UK data points. But this time he did use the gilt market to really help him position a very effective trade. And so at 12:03, negative policy rates, Bank of England says committee had discussed its policy toolkit and the effectiveness of negative policy rates in particular. So remember what they were saying. So yes, we do know that they're talking about, that they've considered negative rates in their toolkit, but it's not something that, immediacy. And then you see here at 12:03:50 how the Bank of England says the embassy had been briefed on the Bank of England's plans to explore how a negative bank rate could be implemented effectively should the outlook for inflation and an output warrant at some point during this period of low equilibrium. So the rhetoric, so this subtle rhetoric change, the fact that they've actually briefed someone. Now, many people could interpret it in a few different ways, and sometimes news can be open to interpretation as opposed to an event that is so obvious, like the first time a vaccine is coming out that has 95. So you watch that stream of Demetris on with regards to trading the vaccine comment, where you have news that is, categorically, what way the market, you have a high probability of which way the market will go if this certain news comes out, and all the markets move and gyrate in that direction. And with news that is a little bit open up to interpretation, well, the skill set is when you don't really think, you think, well, there is a shift, and you might start committing to the trade, but you might not be committing to the trade with your aggressiveness that you would do on something that is very obvious and is an outlier upon expectations. Well, you're going to start feeding it, and then you're going to use your skill set of reading the correlations and the order flow, which we'll be seeing in this price data setup, of how he goes about managing this. And so over here, the fact that they have briefed people does start indicating, compared to what they've mentioned, in the past month. If you look over here, that we are not actively planning for negative rates, still questions about the use of negative rates. The very fact that they have briefed someone is starting to show a little bit more impetus. So this is where you start seeing Demetris really start getting involved in the trade. So let's have a look at, and before we actually look at the trade, so the key market moving comments, so let's just go back here. Bank of England will engage with regulators on how to implement negative rates. Bank of England says the embassy had been briefed on the Bank of England's plan to explore how a negative bank rate could be implemented effectively, and the BOE was briefed on how to implement negative rates. So the rhetoric is ratcheting up. And so when rhetoric starts ratcheting up, pricing needs to happen. And when pricing needs to happen, that presents opportunity. And the very best traders, they know when all of a sudden they have to shift. Now, this was a Bank of England that there was no expectations for this event. We had one of our young traders literally after the first screen dump, the first minute, go down and go have, go microwave his lunch whereas elite top performing traders are staying at their desk until the event finishes. And we had a whole big floor meeting on the importance of, no matter what expectations, whether there's zero expectation or minus zero expectation, you're going to be at your desk until the event is open, until the screen dump is finished, until you see that there's no close of the markets. Otherwise, you're not that professional performer. And this is what separates, the beginner trader, or the trader that doesn't quite make it, to the trader who's this consummate elite performer, is because they understand that there could be opportunity that comes from nowhere, but then having almost the visualization powers to shift gears, from first gear to sixth gear, and put on the risk, take the risk on the table, because there's a change in rhetoric, and therefore when there's a change in rhetoric, there's a change in pricing. So these were the Bloomberg articles from the day, just so you're aware. And a lot of time, the news follows the move, as we all know, especially people who trade, for a living. The OE steps up negative rates, works as the economic threat mountains. So the Bank of England gave the clearest signal yet that it may consider cutting interest rates below zero for the first time in its history. But when you see that statement drop, what separates an elite performer from a trader at the beginning of their career is the ability to assimilate that information in real time and process it, and then take on the risk in conjunction with what they're seeing on the ladder. So in this moment, it's all well seeing it at the end of the day, but you needing to make your money in that moment as a leveraged intraday futures trader. So just want to show you the moves before we look at the execution. And on the price ladder is the execution platform that all of our top futures traders use, and all of our traders use. And you can see this is firstly the Gilts. So at the first it offered, as you can see over here, just around midday, and then all of a sudden you get this bid, and then there's this congestion move just below the 33s, and then there's a move towards the upside. Now, here you have short sterling, the same, around 1208 with a bid. Now, this is a short-term interest rate market. When you look at the ladder, it's a small range, but every tick that it moves is actually, the equivalent to maybe 10 to 15 ticks. I'm not giving you an exact, I'm giving you an approximate. But when this market moves 10 ticks, so that these are 10 incremental points, that's a substantial move. And this market, when this starts moving, knowing that the market is starting to price in negative interest rates, more expectations are being built into the market. So you can see here, whilst this market at 1208, and this is where the key skill set of our elite trader, Demetris, is executing, is he started executing gilt, and he did not take any size off, simply because he could see at the same time the short sterling kept on going higher and then getting pinned to its highs. So he was waiting, because this was resolving itself to the upside. He felt that eventually the gilt would give way once the flattening across the market would stop, and then you start seeing the long end bonds catching a bid. And then this is cable at the same time, a move towards the downside. So you first had that the offer over here, but not a substantial move. But a grinding offer, but still an opportunity for our elite trader. Okay, so now let's go have a look. And when we go have a look at these recordings, I'm also going to be. I consulted with him on his mindset, and I love these streams. The streams that our elite trader and the traders that he's involved with, some of the traders that he backs and mentors. He gives them consistently his entire thought process. And when you get into the mind of an elite trader, it really accelerates your own personal learning development. And so one of the things is, he shared with me some of his thoughts that I'm going to go through of what he was thinking of at different stages of his execution. Okay, so here we have over here is this is the British pound, Okay, so when the British pound is going up, it's getting stronger. When it's going down, it's getting weaker. This is the gilt market. When it goes up, it means it's pricing in more dovish, more news that the economy is going to slow down. And this over here is the short sterling. So this is the interest rate market of the in the UK. Now you can see he's getting involved in a short trade. There's a bit of a blip up. Nothing really has happened in the there's nothing that's been released yet about negative rates. There's a little bit of a blip up in the market that you can see, and then he gets involved in a short share. So this is him getting, in a small little position over here in cable, and he's just feeling out the market. One of the great things about as trader is his ability to first go fishing in the market, just to feel, because once he knows he's in the market, he can start feel when there's those subtle changes. When you're not involved in the market, you might not feel those changes. So over here, gilts near the high of the, cable, the British pound near the high of the day, near the low of the day is the British, is the UK 10-year government bond market, and here is the short-term, short sterling, the interest rate market in the UK. So if anything dovish comes out or negative interest rate rhetoric, you'd expect this market to go up, as well as the short-term interest rate market. This is priced against benchmark interest rates, and the cable to get weaker as they start pricing in more dovish rhetoric, more negative interest rates environment. So now we at this next stage over here where we just about, as I continue on this, you're about to see him getting involved in the gilt market, in the gilt market. He tries to lift some position. So he sees the cable retracing its original blip up, and he starts drifting back to the starting price. At this stage, he feels the gilt can push up a bit, as well as it's bouncing quickly off the lows. So still, he's just feeling the respective markets. And we'll be watching over here as he continues. As it starts holding, he feels there's an opportunity. So he lifts 80 lot, but only gets filled with a 16 lot share at 136, the figure. He's now feeling what's happening, and this is his power. By one market, he's feeling the information of another market. And so he gets involved over here, and then all of a sudden, the cable is still holding an offer. And we're seeing that, he's trying to buy some more at 136.03s, but nothing significant yet. No, the order flow, the speed of the orders transacting isn't, there's this subtle, he's trading off the correlations, and so that's his first little degree of information, his first input information, and he's using that, and he's building his position. He's in a very tiny position here at the moment in cable, but no news has dropped yet. And so what we're going to be looking at now So now the comment drops. Okay, the negative rate. Now look how he gets into his position over here. All of a sudden, the activity and the action, you can see the speed, the velocity has completely changed shape. And his commitment, in that one moment, he's making that decision, and he's buying, he's now just, he bought around 260 lots. Okay, now let's just go through here. So unlike, he mentions, unlike many other instances where he would smash something with big clips instantly, here he starts scaling in slowly, first smaller with 10 lots, and only when he starts seeing the volume picking up, he starts clipping bigger. Now, he outperformed many of the traders simply because this is, an edge where you're feeling a little bit more of what the market is offering in that moment. So now he's interpreting the news. The negative headline has dropped. And so now the reason for this comment itself was not a huge surprise. There was a lot to do with interpretation. And it was really trying to gauge how the market would interpret it. So the Bank of England had said previously that the negative rates are in their toolbox, but it's a fact that they have been briefed by regulators and engage with them that shows they are a lot more serious in implementing them. And this is something that the market wasn't ready for as we start seeing the gilt and short sterling reaction. So you can see now from where the gilt was, you can see the positioning that he's getting involved with. Now he doesn't have the British pound on yet, but now you're going to start watching in this this next clip over here. We're going to start looking at when the negative rate comment gets more attention. You can start hearing the traders on the floor saying, the Twitters are dropping. There's more, people's, mentioning that this is important. They're bringing forward the expectation on negative rates. And so as market participants start processing the commentary, the market starts reacting more aggressively. And you'll start seeing a key skill set of his ability to keep on adding to the momentum. And when you start seeing this momentum add on, you start really appreciating a skill set. Now you start looking at his positioning over here, getting short in the British pound, and he's still got his position in cable. And then all of a sudden over here, he lifts 360 lots in the short sterling. So he lifts 300, and it's a market again he doesn't trade. I assure you, this is a market that he was born and bred on. He probably would have cleared out a few prices there, but you can see he gets into position, and it's this position over here. You can see he's also built himself, in a position of over 300. He had around 360 lots over here, so kept on adding to it. Almost 200 lots in the British pound. So now he has his exposure over almost 600 lots across these three markets, and this is where the magic begins with his ability to read correlation across three markets. And you will see now this is a skill set that has been cultivated over years, deliberate practice, repetitive type of practice, and you start seeing his mouse literally dancing between the three ladders. You can see now the short sterling is moving toward the upside. He's still holding a core position of his cable. You can see just the velocity, the price personality, the shift in the orders transacting, becoming a lot more aggressive. And an exposure of almost 600 lots over here. He's almost up around $100,000 on this trade across these three markets. He's still holding a core position here, around 330 lots. Has hardly got out of any positions across the market because now the flows are there. Now he wants to see what the outcome of this momentum. As long as the momentum is sustaining itself and the news gains more traction, he's going to be, holding this trade. And you can see now the short sterling is pinned to the highs. And when we continue on this clip during this whole period, you'll be having the squawk. You'll be having more news wires picking up, and it just starts feeding the beast on its own. And as it starts feeding it, this trader is going to make sure that he's consistently ensuring that he's going to maximize as much as he can on this trade, using the relationship between how these markets affect each other. They're no longer independent, they're working together, these markets, and that's where him being in one position helps the information input on being in another trade. So now, just before, so after the initial move up, and again, this is some of his thoughts, some of his, his thinking process, his decision making, his, almost, I like to call it, precognition in a way. Gilts have been, almost chopping for 5 minutes near these highs over here. But what's happening is that the short sterling is holding the highs. But what was so skillful here, incredibly skillful, is that the fact that the short sterling, and let me just go through what made him stick with the trade and capitalize on the second leg. So, he got involved in this first leg, but where he made, where he doubled his P&L, where he went, almost from $80,000 to, as you'll see, to $160,000. What made him stick with the trade and capitalize on the second leg of the move was the fact that the short sterling stayed pinned to the high and kept on, just pushing up. And that little information input is what helped him hold majority of size. Many other traders who were maybe long in a gilt started liquidating the position, whereas he was still holding almost 4/5 of his positions. And so at around 12:08 p.m. The shorts UK time, the short sterling started extending the highs while the gilt was chopping in the range. This made him confident that it was very likely that the gilt was going to follow and also take out its recent highs and extend further, as these markets are very tightly correlated on the Bank of England rate decision. So this made him stick with the trade and not really give up on the trade or get convicted out of the trade in that chop. So a lot of people start liquidating the position, and he was just making sure that his conviction and his plan and leaning on the correlations and leaning on his and trusting his skill set and trusting his interpretation of the news and trusting his interpretation of the flows and trusting his interpretation of the correlations, that he was going to really make sure that he would hold this trade. And so as you can see over here, that he's managing his position. So you can see the cable over here still making new lows. So it's making new lows. The short sterling's at the highs. He's going to be holding this core position, even though this has come off the highs quite a bit. The fact that he's seeing these moves happening in these markets, and this is the power of understanding your correlated markets, understanding what you're leaning on to making your information, your trading decision. He's hardly liquidating. He's sticking around the 300 lots. 300 lots long in the position, and the short sterling is still holding high. This is a substantial move for a short-term interest rate market. And what happens over the next period of time, the gilt market starts making and driving higher, and you'll see in this next leg as the market moves towards the upside, the gilt then starts catching up. So over here, as you start watching for the next few minutes, short sterling pinned, and then you'll start seeing the aggressiveness for the second leg as the gilt starts catching up. So now all that whilst it is hovering around you, many people would start liquidating their position, but he's still holding that core, and you can see as long as this remains near the high and cable near the low, he's going to manage. And look over here, he starts feeding it long again, and this is now that second move through that that tight a micro time frame structure for the upside. He's now advancing as he's waiting for this next second leg. And you'll see as the market starts breaking towards the upside, you can start seeing it really start shifting momentum. We've now literally, at those 39s, and we're moving towards the upside. We now broke through the 39s, going towards, made new highs at 42, still has a core position. And this market keeps on, gravitating, holding, and then he continues to hold. Now we're trading at 45s. You can see he's literally doubled his P&L simply because he used the skill set of holding the trade whilst the other markets were still giving him the signal that the trade was still valid. And this is the most important part, and I really hope a lot of people can appreciate, especially experienced people, can appreciate the execution over here, because it's of high class execution in an event that with no expectation and a subtle, nuanced interpretation of negative rates of how you can really maximize a trade opportunity over here. And I just want to do some closing takeaway points on this. The key takeaway is the importance of being switched on even on potential non-events. We tell all our traders, prepare for every event, prepare for every central bank event, because when you are prepared for every event, you're not going to be surprised when something out of the exception does happen. And so very few traders on our floor actually did well on the Bank of England. Some even left their trading desk, whereas here he was able to have a very good day, in the markets. I know we've seen him, have really, bigger days, more explosive days, but this is a day that came really out of nothing. And the more the skill set, there was an incredible skill set of holding the gilt. And if you watch of how he held that market and hardly liquidated any size, whilst these two other markets were giving confirmation, understanding that there could be a delayed effect in those correlation flows. That's where the deep skill set is. And so what to look for to add to your conviction when in a trade. And we spoke about that, those correlations, the order flow, the transactional activity, all key skill sets that were at play and interplay putting on those trades. And then understanding the edge spectrum when clues are subtle and nuanced. And we're going to be looking at this in our last little slide. We'll just give you a little bit more depth of understanding what makes an elite macro news trader. And maximizing opportunity when the nature of the opportunity changes shape. And at the beginning, when the news started getting traction, it goes from the market not really, participating in the headline to the activity picking up more to all of a sudden the activity shifting significantly and understanding how to shift gears as the shape of the opportunity changes. And this is what we call refining edge over time, piecemeal engineering. He's consistently optimizing. Any top trader in any space is an innovator in their space. An innovator, pioneer, and he's been an exceptional pioneer for approaches and ways to trade news. And it's very exciting. And I get so excited that he's happy to share his trading and his news. And people always say that, you're giving away your edge. But if you can give away your edge in a 30-minute presentation, well, it's not much of an edge. An edge is cultivated over time, deliberate practice, stooped in skills and talent. And so this is really quite, amazing that we are able to share an elite trader's performance and how he executes on the ladder. And just on a closing note, I just wanted to, make you understand the idea of edge spectrum. And I'm looking at here from the perspective of news edge intuition and precognition gradient. Some people, when you look at some of his trading, you think he gets in before the news drops, and it's almost like a precognition. There is some research out there that sometimes some people can actually sense an occasion even before the orders hit through. And certainly some of the videos and the streams that we've done, you see the incredible prices that he gets. But really, this is a product of experience cultivating a deep skill set. And so this gradient over here is many people, when there's so-called simple news, and I just wanted to share something with, with you all. So when there is so-called simple news, such as the vaccine, such as Brexit, pretty much everyone can make money on that. If they're at their desk, they see the news drop, and all the markets gyrate and they all correlate. And most people, majority of people with some experience and skill set, and as long as they see that news quick enough, can all make money. But what separates the top to a trader still developing is the ability to shift gears. But generally it's a global herd news. Everyone is aware of the news. So when that vaccine came out, it's the ability to take the risk and also that visualization. But this over here, the majority of people can make money, but the top guys can really push the P&L to the nth degree and commit capital and risk capital when the trade is there. Then I would say the next is when the news isn't simple but fairly obvious. And when you look at fairly obvious news, like maybe a bad non-farm payrolls, so what a bad non-farm payrolls looks like. So there's a bit of research. It's not something that is globally aware, but a bit of research. Still how to shift gears, what the outlier numbers are. That the markets will gyrate, and you'll also understand that the markets will correlate in unison. And so when you get to the next level, okay, where you actually have to be prepared. So traders who are reading their fundamentals, understanding how the markets are reacting with regard to the news environment, they do a research on an event and they know the outliers and they're able to. And so this skill set requires more preparation. You need to know your order flow reading skills, your price ladder skills. And now when you are an experienced news trader where there's no expectation for a change, but you've done your research and then all of a sudden there's a gradual change in the relationships on the price ladder and that event can really be, there isn't any expectation for what the market could do. And then you move into the arena of subtle. So, you can have many traders who had some experience, do well and make money over here. But only the very elite can make money in this area, and then, the top, the 1% can actually still, so like we saw in the Bank of England, when the comment isn't, the markets aren't moving immediately, there is a bit of to and fro, and to maximize your P&L, you have to have the full artillery of skill sets. Not only understanding the news environment, the macro, and what's driving market pricing, but also understanding how markets react to each other, also understanding the individual markets, order flow, personality, and what aggressive looks like, and what subtle type of action, price action looks like. And this is really the goal if you're trying to perfect this skill. And this is where, we're very fortunate to have a trader who does share his trading for many people to learn. Our entire, all of our young guys as well as our senior guys, and it's just incredible seeing and understanding an edge spectrum. And an edge spectrum can take any form or shape, whether you're a profile engineer. And there's different, some profile patterns are very obvious and some are nuanced, and some that you've actually created yourself. Whereas, in the news, it's not just hitting news and making money. There's a whole cacophony of different types of patterns. So I really enjoyed, doing that. It's not often it's not often that I do streams, and so this was a pleasure. I hope I didn't. I hope you learned a lot from the stream. I always learn from these streams, and I hope all of our young traders who are watching have learned a lot from the stream. So keep on developing, keep on evolving, keep on learning, building that deliberate practice, and become the very best trader you can be.